What's up, guys? My name is Derek. I'm a developing ICT student. I've been trading the financial markets for the past 3 years. I recently transitioned to futures from Forex and I mainly trade micro, E-mini, Nasdaq. Alright, so we are in the London kill zone. I am looking to take a trade. So from 3 to 4 a.m. Let me quickly scale down into 15 minutes time frame. And here we're going to have my liquidity targets. So I'll be looking for a buy to target this high right here. The high of the second quarter of the London session is my target on price. So yeah, I am looking to take a trade upside. Moving into time frame, you see this retest at this old support area, and a buy into that should be very ideal. We are currently below the 2-day opening price right here at 21,783.5 on Nasdaq. So yeah, I'm looking to take a buy to target that Q2 high right there. So on ES, we have already taken out this draw on liquidity in the market. So let me take that out. Currently below this daily CV price, and we are below the 3-day opening price as well. So this second quarter here becomes my liquidity target, and that is Q2 high. That is my target on price. So I'm gonna zoom into 1 minute time frame here, and that's it. I want to see bullish price action, particularly above this high. It's either bullish price action above this high, then we use this as support to target that high, or I do get an SMT down here that tips its hand to me that we're going to see bullish price action. This is the kill zone. So this is going to be silver bullet. This is the other block that sent price down. I would want to see price going above that high and using it as support. We break above it, use it as support to target the high up here. But currently, I'm looking for any sort of bullish price action in the form of SMT, market structure shift, and I'll just go in and take a buy. Yeah, so far price has been giving some lethargic movements, nothing really significant. Like I said, SMT or market structure shift, but all these upward candles are tending to have some resistances that have been rejected. I mean, they can literally behave like this all the way up there. I don't care if they do that all the way up here, but I'm just interested in waiting for, like a really nice displacement or an SMT. So let me do a markup on this OB here. I want to annotate the main threshold of that using the body of the candlesticks, and let's name it mean threshold. I will come to ES and I will do the same thing on ES as well. Mean threshold. So this line that you're seeing here at 6,069.5, that is a daily CE. If we go to the daily time frame, you see this fair value gap here that got inverted and then we retook it to the upside. This is the CE of that daily averaging. So on the lower time frame of 1 minute, that is what you're seeing here. Currently price is using that as a support area to then go above this order block, right? So I want to see if we're going to use this as support. All right, so finally we have the displacement that we wanted to have, and let's see if we do get a trade inside of that. I'm going to go with just 2 contracts, and let's see. Now if price tends to take support, all right, turns out I'm tapped in, and let's see if we do get a delivery above this high into that price. For the record, I might leave this trade on for more price action to the upside because I have more buy side objectives than this one. My ultimate draw is this new day opening gap. So if you look here, you can see that the new day opening gap here was not filled. This is my primary target, my ultimate target. If we move to the 15 minutes time frame, see that we have this opening gap here that was not filled at all. That is the draw, ultimate draw on liquidity form. This is like a primary target. So let's go back to the 1 minute time. All right, so now this has now become a breaker. It's no more an OB. That's a breaker for us to use as support to target buy side objectives. If price tries to trade above this high right here, I might take another trade and treat this fair value gap here as a breakaway gap. Okay? Trade above here, I'm treating this as a breakaway gap, and if I take a trade there, I might target the new day opening gap instead with that trade. So let me go in here with 2 contracts, and yeah, okay, let's try 3 contracts instead, and let's put a buy stop above that high. Okay, if we trade above this high, I'm treating this fair value gap as a breakaway gap. That means that we're not going to come into this until the new deal gap has been drawn into. All right, so we tap into it. I'm no more treating this as a breakaway gap because we weren't able to go above that high. So I'm just shrinking my order above this high instead. My stop loss for that trade is going to go below this low right here. I just want to make sure that we are interacting with the principal encroachment of that fair value gap, and it seems that comes in at this price. Okay, so that's why I'm going to put my stop loss. All right, so the first trade is still running, and we have another trade. Do we take a stop loss or do we get a reversal above that high? Still going to shrink my buy stop now above this high, and my stop loss is going to go here. So my second order got triggered here. We are currently approaching the 2-day opening price. Let me bring that in so it's very visible. So we have a breakaway gap on ES being approached here. So the trade really doesn't look good after seeing this breakaway gap being approached on the 4 o'clock New York local time candle. So if price is really going to be bullish, then I'm expecting this breakout to be able to act as support on price along with the fair value gap. So I'm moving my orders back to break even. I want to break even on this trade. I don't think this trade is going to pan out. Let me break even. All right, so I've called quits on the trades on break even. So if they fail to use this fair value gap and this breaker as support to the upside, then I'm out of the trade and it's a break even for me. So let's see what happens after here.